Hello and welcome to the Ditto educational series that will provide you with the skills you need to become a Forex trader. Today we are going to be looking at understanding the major currency pairs in the Forex trading markets. If you want to become a better Forex trader, you must learn and understand a few things about currency pairs. Luckily, handling the basics of this subject is relatively easy, and the way in which currencies are quoted works the same for all currency pairs. The most popular traded currency pairs are known as the major pairs. But before we look at which are the major Forex pair currencies, we need to understand what a currency pair actually is. All financial traders basically look to profit by speculating on the changing value of an instrument, such as the share price of a company or the worth of a particular commodity. The difference with Forex trading is that you are speculating on the value of one currency and its relative value to another. When you have two currencies involved which are grouped together and valued against one another, they are known as a currency pair. This relative value of the pair is expressed as how many units the first currency is worth in relation to the second. So for example, if the US dollar is being valued against the Japanese yen and the exchange rate was 110, it would mean that $1 is worth 110 yen. Simple enough. You can gain some valuable experience and gain more understanding by opening a demo account with your selected broker and physically placing some trades with different currency pairs to experiment. Of course, this is the safest way to do things, as you are trading virtual money in real market conditions, so it poses no risk to you. Let's look at some examples now to help us learn how to read currency pairs. On our trading platform here, we have a variety of different currency pairs listed that are available to trade. Every currency has a three-letter ISO, which stands for International Organization for Standardization, and it's the symbol assigned to the currency. We have the JPY, which is the Japanese yen, the GBP, which is the British pound, USD, which is the US dollar, and the CHF, which is the Swiss franc. Now, if we believe fundamentally speaking that the euro, for instance, is going to weaken due to low inflation, and there is a chance of looser monetary policy from the European Central Bank, we could look to pit the euro against a currency that we believe to be potentially strong in order to achieve the most from the market movement. While you are researching potential currency pairings, you speculate that the US dollar may strengthen due to the Federal Reserve tightening their monetary policy in response to the European Central Bank's decisions and news releases. Based on this fundamental analysis, you would likely look to trade the euro USD. As we will think that the euro will be weak, we are looking to sell euro pairs, and we think that the USD will be strong, so we will be looking to buy the dollar. As already stipulated, a currency pair expresses how much one currency is worth relative to its paired counterpart. So in the price quoted for the Euro-USD currency pair, it is the number of dollars per euro. If our analysis is correct and the euro weakens, 1 euro will be worth less in US dollars, and subsequently the exchange rate will have gone down. We sold the Euro-USD based on our analysis with the hopes that the rate goes down. In regard to Forex quotes in currency pairs, we sell if we think an exchange rate will drop lower, and we buy if we expect it to rise. In the list of currency pairs, you may notice that the euro was quoted first against the US dollar, but second when it was part of a currency pair with a British pound. Technically, either currency could come first, which would invert the rate. In Forex, there are commonly used conventions that order currency pairs in a particular format. The US dollar predominantly comes first in most pairs, with the exception of when it is quoted against the euro or the pound. Now, the Forex market has the highest liquidity in the world. However, only a handful of currencies make up this vast amount of traded currency. The larger the trade value between two countries, the more liquid the currency pair of these countries will be. We discussed the Euro-USD in our example earlier, and it is the most liquid currency pair in the entire Forex market. The most popular currency pairs to which this pair is a part of are known as the major pairs. There is no exact list that defines the exact major currency pairs or what the best currency pairs are, but when we talk about the majors, we are usually referring to the 6 most actively traded Forex pairs with the highest liquidity levels. These pairs include Australian dollar US dollar, Euro US dollar, Great British pound US dollar Canadian dollar, US dollar Swiss franc, and the US dollar Japanese yen. It's no real surprise that the currencies listed here are from vast economically stable countries that have massive amounts of services and traded goods. It is the main reason for the currencies being traded so frequently. Historically speaking, these nations are generally stable, especially in times of political and economical uncertainty. The dollar is the most popular currency of choice due to central banks supporting it as a reserve currency, and as well as that, commodities such as oil are priced in dollars. This gives the US dollar an advantage in that it becomes a necessity in order to trade commodities that it is valued in. Secondarily, the euro is the most popular currency, and now maybe you can see why the Euro-USD is the most widely traded pair. Currency pairs can characteristically behave in a sort of predictable manner that have been known to exhibit behavioral patterns when speaking in terms of historical data and price action. This subject is perhaps too lengthy to go into for this particular video, but we will go on to it in a future educational episode. So what are the benefits and drawbacks of trading the major currency pairs? The greatest advantages of major currency pairs stem from their popularity. You will find that it is safer to trade them as news regarding these pairs are more readily monitored and updated. This gives you appropriate time to plan or avoid trading during certain time windows, and regular economical updates provide opportunities for sharp price movements in time junctures that you can anticipate and possibly profit from. Depending on what type of trader you are, this is not without significant drawback of time spent. For certain traders, being successful in the forex markets can require them to be constantly monitoring news developments, forecasts, economic announcements, and other kinds of data. The largest drawback is obviously the potential for time spent versus reward or loss. The massive amount of liquidity available in the major pairs has multiple benefits. When transaction costs are driven down by greater volume, the result is more liquid currency pairs that can be traded on very tight spreads. Greater liquidity also equates to lessened volatility in general, but no currency pair is exempt from experience massive and freakish volatility, and you shouldn't forget this. Volatility can also be regarded as a drawback for short-term forex traders. If they're not prepared or aware for sudden shifts that the market can take, they could potentially sustain huge losses. The major forex pairs are all in all a good place to start your trading journey. Overall, the benefits we have discussed, such as tighter dealing spreads and greater availability of economic news, I believe outweigh the potential drawbacks which can be trade style dependent. When we trade the major pairs, we have foresight and volume on our side, and with the ability to trade on a demo account using real conditions without the drawback of risk, there is no need to not get started right away. I hope you have found our discussion today informative, ladies and gentlemen. Please sit back and contemplate what you have learned here today, and remember, contemplation is the key to learning. Thank you for watching the video. If you enjoyed our educational sessions, then please like and subscribe.